So let's talk about the explanation of reasonable and supportable information without undue cost and effort. Having explained which proportionality requirements the mechanisms apply to, let's now focus to each of the mechanisms in turn, including explaining how they are applied by companies and using examples to illustrate. We will start with the use of all reasonable and supportable information that is available at the reporting date without undue cost or effort. So, before jumping into the mechanism itself, it's worth highlighting that the ISSB borrowed this concept from its sister board, the International Accounting Standards Board, the IASB, and as a result, benefits from the fact that this mechanism has been applied and is being applied today. The IASB has used the mechanism in specific standards, for example, IFRS 9 financial instruments and IFRS 17 insurance contracts, and in relation to specific circumstances that involve a high level of measurement uncertainty. This is particularly helpful for those who apply IFRS accounting standards, given the understanding that they might have about this concept already, but also because this means that the concept has been tried and tested. So, it's also worth noting that the ISSB has sought in different ways to achieve a balance between the costs for companies in applying the requirements and ensuring investors are provided with consistent, comparable, and verifiable information. One of these ways is that the ISSB designed specific requirements in S1 and S2 to be applied in a manner appropriate for company circumstances, the very focus of this webcast. But the ISSB relied on other ways to support the application of the ISSB standards as well, such as the use where possible of terminology and concepts borrowed from the ISSB that are to be familiar already to preparers and have been tried and tested as well. As such, this proportionality mechanism is an example of that, but there are a number of examples, including the use of an aligned definition of material information. Further, to explain this proportionality mechanism, what we will do is break the requirement in two. Firstly, we'll explain what all reasonable and supportable information available at reporting date means, and secondly, we'll explain what without undue cost or effort means. Let's start by looking at the first part, reasonable and supportable information available at the reporting date. So, what do we need to consider in using all reasonable and supportable information available at the reporting date? First, we need to consider factors that are specific to the company. And second, the general conditions in the external environment. In addition, in some cases, such as in identifying sustainability-related risks and opportunities that could reasonably be expected to affect a company's prospects, all reasonable and supportable information also includes information about past events, current conditions, and forecasts of future conditions. This tells a company what is captured by this concept, and it is an important starting place about what needs to be considered when thinking about this concept as it relates to obtaining information. So let's look at S1. S1 explains the principle of all reasonable and supportable information available at the reporting date. But it is also important to note that where relevant, other ISSB standards may also specify what is reasonable and supportable. This information in specific cases is also relevant. So what is considered to be reasonable and supportable information available at the reporting date? Well, in identifying reasonable and supportable information, companies are required to consider all information that is reasonably available to them, including information, especially information that they already have. This means that companies need only to use information that is available to them at the reporting date. However, this also means companies cannot disregard information that is known. So, let's break this down. Companies must have an appropriate basis for using the information, and also companies must consider information that is available at the reporting date, including historical, current, or forward-looking information, and forecasts of future conditions. As we previously mentioned, companies should use the information that is already available to them. Said differently, this proportionality mechanism was designed to accommodate different levels of information availability depending on a company's circumstances. So when thinking about the information we're talking about here, this includes various sources of data, including both internal data and external data. For instance, data sources could include the company's risk management processes or other reports and statistics. Other examples of external sources of data are industry and peer group experiences or external ratings.
Now, let's move to the second part of the proportionality mechanism. This is the part of the mechanism that provides the parameter about the cost or effort a company is required to incur in obtaining information to meet a specific requirement. And that is, a company needs to assess what constitutes undue cost or effort in obtaining information to meet that requirement. The assessment of undue cost or effort depends on the company's specific circumstances and requires a balanced consideration of one, the cost and effort for the company, and two, the benefits of the resulting information for investors or primary users. What this means is, as a starting point, the company is not required to undertake an exhaustive search to obtain information to meet the relevant disclosure requirement. And secondly, in making this assessment about what constitutes undue cost or effort, companies will need to consider the benefits for primary users of the information and the incremental effort or cost required to provide such additional information. This also means that a company can carry out a less exhaustive search if the cost of obtaining the information is proportionately higher for the company than for others with more resources. In other words, the information that is available without undue cost or effort to a company to use in its disclosures can be different depending on their circumstances. The ISSB noted that companies are prohibited from arguing that no effort is necessary because information about sustainability-related risk and opportunities that could be reasonably expected to affect the entity's prospect is actually useful to primary users. The greater the usefulness of information about a sustainability-related risk or an opportunity is to primary users, the greater the effort expected by a company is in obtaining it. And as a final note, it's important to highlight this assessment can change over time as circumstances change. With regards to undue cost or effort, it is useful to understand what information is considered to be available to a company without undue cost or effort. ISSB standards state that the following information is considered to be available without undue cost or effort. They are used in preparing its financial statement, or the information used in operating its business model, or the information used in setting its strategy, or used in managing its risk and opportunities. In summary, this proportionality mechanism seeks to set a reasonable basis for the effort required to gather information to prepare disclosures when using ISSB standards and to explain the intended boundaries. As we noted earlier, the mechanism does not exempt a company from specific disclosure requirement. Company cannot claim information is not available to meet disclosure requirement. Companies are required to use information that is available to them to meet disclosure requirement, but not only that available without undue cost or effort. And we should highlight that over time, the reasonable and supportable information that is available without undue cost and the company's skills, capabilities, and resources are expected to change. And as a result, the expectation is that disclosures in this area will improve over time.
Now, let's look at two examples that consider how using all reasonable and supportable information without undue cost or effort can support the application of specific requirements. Note that the following examples do not illustrate all possible circumstances, but simply seek to offer a few examples. In this first example, we will illustrate some of the potential application challenges that a company might face in providing information about all sustainability-related risks and opportunities that could reasonably be expected to affect its prospects, specifically in identifying such risks and opportunities and how the proportionality mechanisms support its application. So to meet the objective of IFRS S1, a company is required to disclose material information about all sustainability-related risks and opportunities that could reasonably be expected to affect its prospects. When doing so, the company is required to determine the scope of its value chain, including the breadth and the scope. A company might face challenges in obtaining information to identify its sustainability-related risks and opportunities and determine the scope of its value chain because of, first, complexity in its operations, second, the breadth and composition of its value chain, and third, in some cases, challenges obtaining reliable information from third parties in a timely manner. Using the proportionality mechanism of reasonable and supportable information without undue cost or effort provides parameters to help the company identify the type of information to consider in order to comply with requirements associated with identifying its sustainability-related risks and opportunities that could reasonably be expected to affect its prospects. In introducing this mechanism, the ISSB noted that this clarifies that companies are, first, required to use only information that can be supported to avoid overstating or understating risks and opportunities. Second, required to use all information that is reasonably available at the reporting date. And third, not required to undertake an exhaustive search for information. And as we said earlier, information used as part of a company's risk management processes, or in setting its strategy, and in preparing its financial statements, is considered to be available without undue cost or effort, so as within the set of information to be considered when relevant. In considering other information as part of its assessment of its circumstances or of what constitutes available and supportable information without undue cost of effort, which includes considering the cost or effort to obtain information against the benefits of the information to primary users, the following information might also be used. Firstly, information from a peer company's disclosures for public listed companies, or secondly, feedback from engaging with investors in identifying an entity's sustainability-related risks and opportunities. As the entity considers this information in determining the extent of effort or cost incurred to obtain information from these sources, the entity may consider what is considered undue cost or effort by balancing the benefit of obtaining more information with the cost or effort of doing so. Consideration would include factors such as whether the information might be available without undertaking an exhausting search by the company, given such information might be readily available as a result of other activities of the company, including public and private meetings or readily available public information.
Thanks, NDD, for this first example. Moving to our second one, we illustrate some of the potential application challenges that a company might face in preparing its Scope 3 GHG emission disclosures and how reasonable and supportable information without undue cost or effort supports the application of this requirement. Paragraph 29A of IFRS S2 requires a company to disclose its Scope 3 GHG emission. And Scope 3 GHG emission are indirect GHG emission that occur in the value chain of a company, and this includes both upstream and downstream emission. In doing so, a company might face challenges in preparing particular aspects of the requirement. For example, some challenges might arise about quality or availability of data, use of estimate or calculation methodologies that creates uncertainty in measurement. Specifically, there might be data quality challenges, including that a company might find it challenging to assess the quality of the information. There could be challenges related to availability of data, including the ability to obtain information from the value chain, because the emissions include those arising from activities that are not under the direct ownership or control of the company. This might result in costs associated with data collection, or it might result in being unable to collect such data in a timely manner. Using the proportionality mechanism of reasonable and supportable information without undue cost provides parameters to help the company identify the type of information that it could use in preparing its disclosure in order to comply with the requirement to measure and disclose its Scope 3 GHG emission. To assist companies with measuring their Scope 3 GHG emission, the ISSB also introduced a Scope 3 measurement framework that categorizes and prioritizes the input used to measure the Scope 3 GHG emission. And this includes prioritizing data based on direct measurement and data that has been verified. The application of Scope 3 measurement framework is within the context of this overarching requirement of using information that is reasonable and supportable information available to the company at the reporting date without undue cost or effort. In this way, the proportionality mechanism complements the Scope 3 measurement framework that used together assist companies in measuring and disclosing its Scope 3 GHG emission. As part of its assessment of its circumstances of what constitute available and supportable information without undue cost or effort, including the consideration of the cost and effort for the company in obtaining the information compared to the benefit of the resulting information for primary users, the company might determine that it's appropriate to use the following information in preparing disclosures, also taking in consideration the Scope 3 measurement framework. So, these include information from prior periods from entities in its value chain as a basis for estimation. It includes industry average data for specific activities in the value chain, for example, information from published database, government statistics, literature studies, and industry association. It also includes emission factors that are available to the company. In addition to the provision of this proportionality mechanism, when a company selects the measurement approach, inputs, and assumption in measuring Scope 3 GHG emission, the ISSB made a number of other decisions intended to address the challenges with Scope 3 GHG emission. We're not focusing on those today in this webcast, but it's important to mention them given they can work together to support application. And these include introducing a relief to address challenges associated with data from entities in the value chain that use reporting periods that differ from the company's reporting period, subject to specific condition. It also includes introducing Scope 3 measurement framework that we have briefly mentioned, and providing a transition relief so that in the first year in which a company applies IFRS disclosure of Scope 3 is not required.